I'm about to show you something you haven't seen in a while. You ready for it? 3, 2, 1. Here it is. It's the accounting cycle we introduced you to in Chapter 2. It's the 9 steps in order that businesses use to wrap up their financial records for a particular time period. We start at the top with receiving source documents and analyzing transactions. That happens pretty much every single day. We journalize transactions in chronological order. That happens pretty much every single day. We post them to the general ledger and update our accounts. That happens pretty much every single day. But typically, at the end of an accounting period, we prepare an unadjusted trial balance. And that's as far as we got in Chapter 2, the unadjusted trial balance that lists all of your accounts and their balances at a particular point in time. And then guess what? Already in Chapter 3, we've already done the 5th step. At the end of the accounting period, and again, that's the key, at the end of a period, we make adjusting entries to record revenues and expenses in the right time period. That's the 5th step of the accounting cycle, is recording those adjusting entries so we can comply with accrual accounting. Which brings us now to step number 6. Take a look at this. Here's fast forward. This is their unadjusted trial balance at the end of December. Here's all of their accounts. Their debits equals their credits. That's good. That's very important. But remember, the reason why we call it unadjusted is that a lot of these accounts are not up to date. So in our previous video lessons, and hopefully you've been doing the practices in Chapter 3, we've done adjusting entries to update our accounts to record revenues and expenses in the right time period. So this is a worksheet that we use sometimes in accounting. Now we're not gonna have you do a worksheet like this in your practices, but this is just showing you all of the adjustments that we made to Fast Forward's financial records at the end of December to record revenues and expenses in the right time period. Which brings us to step number 6. The 6th step in the accounting cycle is preparing an adjusted trial balance. We're not trying to be tricky here. We're just saying that now, after all the accounts are up to date to reflect accrual accounting, we now have our updated balances as of the end of December. For example, supplies was $9,720, but we used $1,050 worth of supplies. So now the supplies account has decreased. Or let's go down here. We recorded $300 of depreciation on equipment. We didn't record any depreciation whatsoever throughout December, but we wait to the end of the month, and now that $300 depreciation expense is updated with our adjusting entries. So the 6th step of the accounting cycle is preparing our adjusted trial balance after we made those adjusting entries to reflect accrual accounting. Now we can get to the 8th step of the accounting cycle. I'm sorry, the 7th step. Let me backtrack. The 7th step. And that is preparing our financial statements. And guess what? Good news for you and me is that we can just take the numbers from our adjusted trial balance and make our financial statements. So really, going back to the previous slide right here, we can just grab each of these numbers one at a time and plunk them into our financial statements. Yes, I said plunk. That's an official definition. So here we go. From the adjusted trial balance, we can go ahead and make our financial statements in these steps. And really, you learned this in Chapter 1, so I'm going to kind of blitz through this pretty quickly. Step number 1, we prepare the income statement because we need to know what net income is. Step number 2, we prepare a statement of retained earnings because we need net income from the income statement to plug into our statement of retained earnings. Step number 3, we prepare a balance sheet. We need to do our retained earnings statement first because we need to know ending retained earnings to plunk into the balance sheet. And then we do the statement of cash flows. Now, I just want to let you know, we're not going to go in depth on the statement of cash flows. That's one of the financial statements we're not going to focus a ton on for you to prepare. But later on in this class, we'll show you how we analyze a statement of cash flows. So just a heads up, we're really going to focus on these first 3, the income statement, retained earnings statement, and balance sheet for the next part of this class. So this is what it's going to look like. The first step right here is preparing the income statement. But guess what we can do? We can just take our adjusted trial balance and notice every single account after dividends would appear on the income statement. We've got 2 revenues. We've got 1, 2, 3, 4, 5, 6 different expenses. We can just take our revenues and expenses, transfer them over to the income statement, and make our ever important income statement that shows revenues, expenses, and our profit or loss for the month of December. For the retained earnings statement, it looks like we got retained earnings on the adjusted trial balance is 0, but then we add our net income, subtract our dividends, that's $200 from our adjusted trial balance, and we get our ending retained earnings. Then we get to our balance sheet. Assets always goes first. We just grab them from the adjusted trial balance. Same thing with liabilities. We can just take those numbers from the adjusted trial balance. And in our equity section, we transfer over our ending retained earnings from the retained earnings statement. And bam, there we go. We have a balance sheet for you. So the whole point is that we can grab the numbers from the adjusted trial balance and make our ever important financial statements. So there we have it. We are getting close to the end of the accounting cycle. We've now gone through steps 1, 2, 3, 4, 5, 6, 7, and notice a lot of them happen at the end of the accounting period. That's why when a company says, hey, we're closing our books for the accounting period, we're doing month-end close, that takes some time in real life. In fact, oftentimes it might take a week or even longer to go through and closing your books and doing your adjusting entries and your financial statements, and a preview for your next video lesson where we talk about the closing process. But we'll stop right now and talk more about the closing process when you come back for that lesson.